Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Hey, and thanks for having me back, Jim.
A listener asked, Ross has stated quite unequivocally that house prices do not change in a month or even in 3 months. However, in his last show, he stated that Canadian home value is dropping millions of dollars every minute. So how do you reconcile those two ideas, that home prices can't change over any 30-day period, yet values are plummeting every day?
How do you reconcile? Well, the first one is about the house price changes we've talked about in the show here for a couple of years, that house prices do not change in any 31-day period. There is no data available anywhere in North America to substantiate it. There is no proof that has ever been provided that can substantiate it, because it doesn't happen. House prices do not change in 31 days. As I said in the show before, we offer a $10,000 prize. We're right now in discussions whether we want to bump it to $100,000 because we know no one can claim it, because there is no proof available. House prices do not change in any 31-day period. So I'm not going to change that answer. The second answer is probably in relation to what we were talking about last week, where I said in the show, housing wealth is dropping by the millions of dollars. Well, housing wealth is not a calculation based on house prices. It's based on a calculation of house price illusion. House price illusion is what we've talked about in the show in the past as well. House price illusion happens when a society, a group of people, a neighborhood, a community, a street, a neighbor believes that their neighbor's house has changed in price and that their house has changed in price at the same time. Banks, this is all how they lend money. If Joe's house down the street sold and you own a house similar to Joe, and Joe, the buyer for Joe's house, paid Joe $100,000 more than what your house was worth when you bought it, or what you paid for your house, not what it's worth, what you paid when you bought your house, then the bank will let you borrow that extra $100,000 if you have the income to support it. It's all based on house price illusion. And a housing correction is the only thing that takes that illusion away. It wipes it out. So what that means is, or what I'm trying to say is that house prices do not change in a month, and I will go further and say they don't change in 60 days, and I'll go further and say they don't change in 90 days. I will go further to say that they don't change in an entire year. What does change is the deception of how the MLS infrastructure works and the current ignorance of housing analysts and economists on how that infrastructure was built, what it was designed to do, and what responses it was designed to elicit in the Canadian public, or North American public for that matter. And that means house prices don't change in 31 days. You can, again, if you've got proof that house prices change in 31 days, you're welcome to claim the $10,000 reward that we offer for that. It has been unclaimed by over 250,000 realtors. The people who actually have had access to the data since 2015 or 2010, when it was first offered, way back in the old Korea Stop the Insanity campaign. It was never collected. If one realtor could have collected it, folks, it would have been collected. The decision we're having right now to kick it up to 100K is just simply so we get the attention of these bank economists who think that they think that they know better, that they understand how housing markets work. Okay, well, guys, supply the proof. Prove to us. Give us the proof, and we will publish the proof that you have given us. We will publish it. We have no problem, because we know you can't supply us with the proof. You can't make the world flat simply because you say it's flat. Sooner or later, someone will travel out to the end and find out that they don't fall off. Wealth, on the other hand, is based on an estimation of value, whether it's a stock or whether it's a house. If you don't have actual cash in the bank that you're counting, any other wealth that you have is an illusion. The stock that you believe is worth $100 today can drop in price to $50 tomorrow. You didn't lose $50. You lost the illusion of those $50. The sad part is that the entire economic structure that we operate under today is built on that wealth illusion or house price illusion. In other words, if one of the owners of 10 homes on a street decides that they want to go out and borrow money, they will get an appraisal done in their property, they will go to the bank, and if the appraisal matches the number that they need, the bank will lend them the money. The bank will create the money out of thin air. So many times we've heard these concepts that banks create money out of thin air, or the banks increase the money supply. Well, what we would say is, no, that's not true. We would say that what happens is the appraisal on a property, which is an arbitrary number built on the illusion of house price change, is what creates money. If there is $100 billion of new mortgage debt booked in a year, that means there is $100 billion of new money that comes into the Canadian economy. I'm not saying that there aren't other assets that a bank or a government can use to create money. I'm just speaking about the $100 billion that I know is created every single year through house price illusion, the trading of real estate. It's what allows the new housing stock to be built. So that's where the confusion happens, I think, for this listener. When he was saying, Ross, you say that house prices don't change in 31 days, but then you're saying housing prices, home values or wealth is dropping in the $1 million a minute. You're talking about two totally different things. House prices don't change. You have been conned. The nation has been conned. It's going to be debunked with data. The fact of the matter is, no one has been able to claim the prize. Right now, there's $10,000, 5 months of CREB. So for the 140,000 realtors that are out there, that are on CERB right now, they can claim $10,000, 5 months of it, simply by going to their MLS system, looking at the millions of houses or the hundreds of thousands of houses that they have on their local MLS system for the last 40 years, and prove house prices change in 30 days. They can't do it. Flip side, Statistics Canada will be measuring the wealth of the nation through house prices, and that wealth is dropping by millions of dollars every minute. As of last week's show, it slowed down a little bit this week because the way that they calculate it changes that rapidly. So hopefully that answers the listener's question. But we remain rooted in prices do not change in 31 days, no matter what anyone tells you. And if you can prove it, there's a check for $10,000 here waiting for you to collect.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're chatting with Ross Kay. Ross, a single woman with a young daughter living in Vancouver who has a government job earning $52,000 a year, has been offered a chance to work from home. She's wondering if these kind of offers will change the Vancouver housing market to the point where she can actually afford to buy a home.
Oh, great question. Great question, Jim. It's not going to change the Vancouver housing market to a point where she's going to be able to afford a home, but it is going to change her life choices, where she's able to set down roots. Now, historically, Canadians have moved to places where they can afford to live. Now, once the family gets rooted there, in the following generation, they go out and look for jobs in those communities to try to continue living there. And this is a flawed philosophy that we have built into us. There's a great degree of fear that we have when we even think about leaving our hometowns and going and living in another place. We experienced this, for a couple of decades when we're handling relocations, Jim, where, a family had a relocation offer. Often it was military, RCMP, government transfers. Even in the other days, it would be bank VPs, getting transferred from location to location. All of their moving expenses were covered. Their real estate fees, their appraisal fees, their land transfer tax, their moving costs, everything was paid for, right? Often, to move an employee cost over $60,000. Over what, almost a household was taking home back then. So people moved, but there was fear. So when you were working with these people, there was a real concern about moving to a new area. And then when you study home ownership and you study how people interact with their houses, you find people really don't want to change cities. They don't want to change where they live. But this move to telework is going to be transformational in terms of how it improves people's lives. This lady that you talked about, okay, so $52,000 a year, and based on Mr. Siddell's latest decision of last week to change the gross debt service. Oh, by the way, folks, all he's done is he's returned the gross debt service maximum to what it was for the first 20 years that I sold home. So understand, he's returned the gross debt service ratio maximum to 35%. I don't think I sold a home to a family over 34%, because over 34% is a dangerous time for buyers to extend themselves. Certainly first-time buyers. And when interest rates are higher, it's an extremely difficult. See, this is what the misunderstanding is on that discussion. As interest rates fall, the risk of the borrower over borrowing decreases. It's just naturally how things go. There's this discussion about how the risk of rising interest rates. I've heard of the risk of rising interest rates since I started in the business. Interest rates have declined from the early 1980s up until today. There is no way that the governments can actually raise interest rates, as far as we can tell, because every time they have tried to raise them, even by 0.5% or 0.25% over the last 30 years, the housing market immediately turned negative. Housing wealth started to decrease, and the resulting negative impact on the economy was being felt, and governments wanted to be reelected, so they can't allow that to happen. This lady right now qualifies for about $18,000 a year in home ownership costs. Okay, that is a reasonable thing for this lady to be expecting to spend if she wants to own a home. Okay, so $18,200 a month, and then $18,200 a year, which is basically $1,516 a month is what she qualifies to buy. And that would be a safe thing for her to spend. Well, you're not going to buy a house in Vancouver for $1,516 a month. Okay, you might buy a one-bedroom condo, but you're not going to buy a house. You're going to have to move out to the suburbs. So at $1,516 a month, she's looking at around $350,000. So she's probably got to get out to Kelowna, okay? Or she's got to get into a townhome out in Abbotsford. You can have a great life And that's your first step in the property ladder out in those places. This is the choice that's going to be afforded to today's Gen X and Millennial. You're going to be able to structure your life the same way that your parents or their grandparents before them did. You're going to have a choice of moving to a neighborhood that is more affordable. Now, you can say, well, I want to live in Vancouver. Okay, well, that's your choice. Not everyone earns enough money to live in Kitsilano. Not everyone makes that amount of money. If you want to continue to butt your head against the wall and say you want to own a home, but it's got to be in this neighborhood, well, then you're never going to succeed. Now, everybody's got to remember, I'm not telling anybody to buy a house right now. It would be the most foolish thing you could make to go buy a home right now. But when the time is right, if you have an opportunity to telecommute, then that's going to be an opportunity to transform your life. Because instead of paying rent for a little tiny condo in Vancouver, you may be able to move down the road and own a single detached home. Now, but it's not in Vancouver. Okay, that's your choice. Not everybody can live on the Pacific Ocean. Not everybody can live on Lakeshore Drive in the GTA. Not everybody can live in the Muskokas in Northern Ontario. Not everybody can live in Rosedale or Kitsilano. That's just the reality of it. What I'm saying is the positive spin on this, the positive comment. This woman is going to have an opportunity, if this comes to fruition for her, where she's authorized to telecommute, that she can transform her life and that of her child. She can start living a more affordable life, which gives her more investing opportunities with the excess income that's left over. It's going to give her tremendous amount of personal freedom because you're not going to be confined to a little condo. And in this price point, we're probably talking around a 500 square foot condo is all she would be able to rent. You're going to have a backyard. You can have a garden. You're going to be able to have a community around you where it's green, where the schools are close, where you can walk to the store if you so desire. You probably will even be able to afford a car if you want it, because that's the kind of shelter cost savings that you're going to have a result of these decisions. So this is not going to solve the cost of single detached homes in Vancouver or even townhomes for that in that matter. But as you move further out, away from the city center, it's going to increase it disproportionately in the favor of those who have the ability to telecommute.
We'll have more with Ross Kay right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a regular listener, has asked, how long should they plan on waiting before buying their next home? They're in their 60s. One partner recently diagnosed with cancer, so they're really hoping to get some advice.
So the common theme really seems to be about this, how long do you have to wait? In this situation, this is going to be a totally different answer than I would have got in terms of waiting for the single woman in Vancouver. The single woman in Vancouver just needs to wait and allow this correction to roll out. So, and she needs to start exploring the options that she has before her. Someone in their 60s, where one of the partners has got bad news, where there's health concerns, time is of the essence. It's a totally different perspective. what you learn working with homeowning families or families over the years is the value of time or the cost of time. And as you progress through life, time becomes more and more valuable. So while the young couple could choose to wait so that the long-term cost of the home is going to be lower, in other words, over the next 30 years, someone later in life may decide that that cost is money well spent today. Instead of going out and buying a $60,000 car, a new Ford F-150 pickup truck, they may decide that it's better that they spend that money on the home, even if it drops in value. Because the truck is going to depreciate the same as the house would be depreciating. But the quality of life is totally different. We believe homeownership itself extends the lifetime of the families that live there, the principal owners of the home. We believe that. The data pretty much holds true on this account. And in people in these situations, they really have to look at their situation and decide, what is that worth? And in a hard, cold way, Jim, this is how we have come to approach this discussion. If someone told you, if you were worth $1 million, and someone told you, you can live 1 year longer, but it'll cost you $1 million, would you spend that $1 million to live 1 year longer? Most people would say, sure, I don't care. At the end of the year, I'd be gone anyways. Spend $1 million. Then you say, okay, well, if it would extend it a year or a month, if you would just get another month, would it be worth $1 million? Well, facing a month like that question, in the reality, people are going to say, yes, it's worth $1 million. Then the question goes, okay, would it be worth a week? Would you give up everything that you have left, your $1 million in wealth, to live 1 week longer? People inevitably will say, yes, I'll give that $1 million up for 1 extra week. Then it drops to the day. The answer is still the same. Yes. An hour. 1 extra hour with your loved one. The answer is yes. 1 minute. Would you give up your entire $1 million of wealth if you were guaranteed to have 1 more minute with your family? The answer is still yes. And arguably, it gets down to the last breath. If you could get 1 more breath for $1 million, would you take it if you had $1 million to spend? And the answer is yes. Time is an extremely valuable commodity. And what you learn studying homeowners over decades is the value of that time. How much it's worth being out in a backyard, playing with your kids when they're 7, 8, 9, 10 years old. The ability to have your daughter have a wedding in your backyard or a party, the birthday. The ability to not waste time moving from house to house, condo to condo because you're a tenant. The ability not to waste 3 to 4 months every time your landlord tells you that you have to vacate. These are all extremely valuable, priceless items in your life. And that's what this listener is faced with. You have to look at whatever diagnosis that is happening, and hopefully it's not that bad. But you've been given a warning call, a shot across your bow. This is the reality of the remainder of your life. The first 60 years or so has already disappeared. You have what's ahead of you. How much is it worth you being in a home that you own, that no one can move you out of, that you can set up any way that you want, you can paint the walls any color that you want, you can move the walls around any way that you want, you can put a lift anywhere that you want, you can put anything you want in the house. How much is that worth to you? And if your answer is it's priceless, then I'm going to say to those people, what are you waiting for? Go ahead and start looking now. There are tremendous deals out there right now that are already well off in British Columbia, well off their 2016 values. In the GTA, well off their 2017 values. In Alberta, way off their 2013 values. And in Montreal, already well off their 2020 values. Time is priceless. You just have to decide what price you're willing to pay for it.
Ross, thank you so much for being on the show.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.